So Minera Alamos is a quasi-gold producer and gold developer in Mexico, and I think I'm actually going to address the elephant in the room, which is Mexican politics, quite considerably at the beginning of this presentation, because if you wanted to build gold mines in Mexico, historically that's not been a problem. In the last 3 years, you would think that Mexico is becoming Venezuela. The headlines have been so negative that, and there was no, the headlines suggest one thing, but it's much more nuanced than that. But rightly, if I would say that to an investor, they would ask, well, show me evidence to the contrary, and you couldn't. Instead, you had AMLO-like statements. And rather like the Wicked Witch of the West in The Wizard of Oz, AMLO is now gone, and things are improving. We saw at the end of last year a sentiment change with the incoming president, his heir apparent, Claudia Sheinbaum, which again, if you read the headlines, Claudia was presented as a World Economic Forum environmental communist. And the reality is, if she was all those things, it was a big improvement. And she's not all those things, but I think she's already actually shown with the tariff fights and Trump fights that she is approaching her presidency whilst protecting some of AMLO's legacy with a much more pragmatic approach to things. So much so that the left is really starting to be up in arms because her position on mining is vastly different than AMLO's. And unlike last year, when I was here last year, it really was peak doom and gloom Mexico because you were going through an election cycle. And AMLO was throwing out a lot of red meat to his coalition base. In Canada, we have, I don't know, maybe 5 or 6% of the population that suggests they're Green Party voters, but they get 1 seat in the Canadian Parliament. In Mexico, the Green Party is about 13% of the Morena Party coalition. And one of the things AMLO really wanted to do was make judicial reform in Mexico. His judicial reform, which got passed, is awful. But in a year where he needed to keep his coalition together to get those voted through, he threw out a lot of red meat to that environmental base, including mining, including genetically modified corn, anti-fracking and all that. So at the beginning of September, where we have this weird month where AMLO is still in power with the new Congress, what did he do in the first week of September? He jammed through his judicial reform, then everything else withered on the vine. So we saw in October a bit of a lift in Mexican kind of development and permit proxy plays. And that's as sentiment was shifting. And that's really what has fundamentally changed in Mexico in the last 4 or 5 months, sentiment. But that's all it is unless we finally start seeing paperwork moving again. And to put in perspective, the last time an open pit was permitted in Mexico was Orla Mining's Camino Rojo. And that, you have to go back to like October 2020. It's a very long time, especially for a favorable mining jurisdiction, typically like Mexico. Now, the good thing is, starting to see that paperwork move. It was never going to happen on Claudia's first day in office. This was not like a Joe Biden killing Keystone on day 1 in office. It takes time to reorganize the new administration, the new departments. And what we've seen at the beginning of this year is they've launched their national development plan. And this is what the left are kind of up in arms with, because there was a lot in this plan, including some lofty goals like lifting the Mexican economy from 12th in the world to 10th in the world. But there was a lot of stuff relative to mining in there. Mining designated a strategic sector. Public funding for infrastructure projects related to mining in Sonora, Zacatecas, Durango. An international roadshow to attract foreign investment to the mining sector in Mexico. So Not the kinds of things you would expect to see if there was a blanket open pit mining ban, because there never was going to be some blanket open pit mining ban. So what we've seen already this year is paperwork starting to move. I think the market is sleeping on this, and I get it, because after the last 3.5 years, maybe you wait and you want to see some of this stuff move. The earliest stuff that's going to move, the low-hanging fruit, is underground mines. It's permit amendments. But I will buy everyone in this room that's here next year an English beer, probably, because I won't be able to speak Spanish still. If we don't see open pit related permit news in Q2 of this year, it's coming. There are big projects. Tony McCooch, CEO of Discovery Silver, was just down at the BMO conference talking Q2 for the Cordero open pit in Chihuahua. You've got San Nicolas project in Zacatecas, where our Cerro de Oro that's awaiting permits that's a big joint venture between Agnico and Teck. That's rumored to be coming soon. Camino Rojo, which has been waiting on a layback amendment for their giant open pit mine in Zacatecas as well. I expect to see in April or May of this year. The moment you get something that's open pit related, all the headlines of the last 3 years that have basically made people think, well, if there's another hole in the ground, the if will get removed, and then it will be back to when. And in fact, we will see a normalizing of Mexico, because traditionally, if you're in any company in the mining space, you're going to meet investors, and they always have a polite way of saying no, which I appreciate. They always try to make it polite. And the traditional reason why people will not necessarily invest in something in Mexico, the polite way of saying no, they'll cite the cartels. The cartels are as much a part of Mexican fabric as fast food is in the US. It's sad, but it's a reality. And you're not going to change it, and all this, designating them as terrorist organizations or whatever, isn't going to change anything. Just like RFK is not going to change Americans eating burgers. Now, the political noise in Mexico in the last 3+ years, and if you do a Google search now, the leanings of these search things will still suggest the sky is falling in Mexico, and it's just simply not the case. The traditional polite reason is the cartels. The political noise has been so loud in the last 3 years that I haven't been asked. Well, I gave a presentation in London about a year ago, and I said at the time, I have not been asked a question about the cartels for over 3 years. And I look forward to when I'm asked about the cartels again, because that actually means this period of political noise is waning, and we're back to the kind of what's normal in Mexico. Well, I'm flying down to the BMO conference in a big family office who has, 3% of the company. Had to ask. He goes, I have to ask this, Doug, about the cartels. And I go, thank you, Jason. We're back to talking about the cartels again. That's a heck of a lot better than talking about these AMLO-like headlines on Reuters and whatever that suggest something that's just not the case. So things are improving in Mexico, and for those looking at open pit-related news, I expect us to see it in Q2. So where are we? We have a series of advanced projects in Mexico. Cerro de Oro is in permitting right now. Santana's in a modest state of production right now. La Fortuna, another open pit, actually has its permits. We want to make it bigger before we build it. And we actually recently picked up something in Arizona. Perhaps 3 years ago, if we had it, we wouldn't have got hit so much with all this Mexican noise. But again, a brownfields, advanced, largely permitted gold mine that we plan to have back into production in early 2026 in Arizona. Lots of charts are kind of weird today, but there's some numbers up there, and we're largely retail-owned, high-net-worth individual family offices. Management owns 6%. It's about how we own our 6%. Just so you know, the stock's trading around 34 cents right now. I own just about 11 million shares. My cost base on those 11 million shares is 27 cents. You know, I'm a big, like, I see a lot of these pie charts in company presentations, and it shows management owns 40%. You know, I would take 6% where that stock has been bought in the market alongside your shareholders, and having a 40% wedge where when you actually drill down on the data, the ACB on that paper, they've hardly invested anything for that. I think one of the reasons we have the loyalty of our shareholders is because of a lot of the things we do the right way. Recently, we set some stock options, first time in 2 years. We're brutal in that regard. There are companies which will set the maximum number as quickly as possible, and we're focused on the business. Sometimes we don't focus on ourselves, maybe as much as we should. I had my 800,000 options set at 60 cents against a company which were at 33. My CFO said, Doug, why are you doing them at 60? And I said, because I don't make money on my stock options. The reality is, 33 cents to 60, my stock position goes up $3 million in value. My options, it's a 200 grand differential. You know, I'd rather have my options set at a price where I consider 90% plus of my share register to be whole. Before I'm making money on those, they need to be making money. It's all those little things which have built a lot of loyalty in our shareholder base. But institutionally, we're only really owned by generalists, not the mining-specific resource funds, because they are victims of their own doing. They love scale, and with scale comes scale of problems. You know, these projects that we focus on, and I'll go through them today, are high IRR, low CapEx projects, quick payback, but they're modest. You build a few of them, you start scaling up to something which is more institutionally appetizing. But in the meantime, actually it appeals to the family offices, it appeals to the high net worth individuals. And I like it as a business model because, though, you know, whilst the old adage is a small mine or a big mine has the same degree of problems, when those problems hit big operations, so I can give you examples of big development projects in this last cycle that had huge cost overruns. You know, Valentine Lake and Marathon Gold, Magino for Argonaut Gold, obliterated their shareholders. Because when you're having $300 and $400 million capex overruns, that got met with huge dilution for their shareholders. We can be much more nimble. You know, the next two builds that we're doing, maybe a 60 million combined capex. If you have a 30% overrun on that, it's $20 million. Sure, it's annoying, but it doesn't create this huge equity funding gap that's required and met with dilution. We have a well-rounded board as well, including myself, and in the interest of time, I'll rush you to some of the economics of these projects. So they're small mines. You know, arguably you want to get to about 100,000 ounces to be relevant to the institutional space. But I think what's more critical with our projects is they're very cheap to build. You build a couple of those, you get to the 100,000 ounce mark. Our costs are remarkably low compared with the ever-rising industry cost curve. And when I say ours are very cheap to build, we have industry-leading low capital intensity on these builds. I used to say this without having the data, then I asked our bankers to come up with the data, and I was a little relieved that I'd been saying we had industry-leading and then was able to demonstrate we do. We now got a jurisdictional blend with Mexico and the US, and the US, we're literally a stone, you know, we just have to suck it in a little bit. We could probably squeeze through Mr. Trump's wall to get to Arizona from northern Sonora, where we're at. This is a new mine we've just acquired in Arizona, produced 500,000 ounces back in the late 80s, early 90s. There were some attempts to put it into production from an underground perspective that failed for a number of reasons. Gold price environment was one of them, bad management team, it was over-encumbered. But what it's allowed is a tremendous amount of sunk cost. Sunk cost isn't always sunk value. There are a lot of projects in this business that you see time and time again, companies will go, well, Company before sunk $100 million into it. Now we're going to restart it. It will be cheaper. And then they end up sinking another $100 million into it. In the case of this project, there was 4,000 meters of underground development done, 2 underground portals, all the surface infrastructure. And it's a nice small project, 40,000 ounces a year, cost about $36 million to put into production. Sub $1,300 AISC, which means this project will work in a $2,000 gold environment. We don't need spot. As an industry, we get this kind of, we're seen as a cyclical industry because we build mines at the wrong time in the cycle. We should build mines that work at the worst point of the cycle and take advantage when we have blips, because we don't know where this gold price is going and we can't predict that it can just keep going up. So, probably a more realistic in the current gold price environment is to look at a $2,200 case. It's 100% IRR on the project, quick 1-year payback on it. This is our style. Build things, generate cash flow, reinvest that cash flow into the business. It's basically permitted. It's got lots of exploration upside. It was missing a mill that we happen to have, so this was a perfect corporate fit. And it's a high-grade resource. It's a diluted grade of around 8 grams per ton. And it's different. It's underground. Our stuff in Mexico is all open pit. And while Santana is up and running, it's a bit of a transitional asset for us. The real future for this company, and I didn't start how much time I've got, so I'm moving quick. We'll get on to Cerro de Oro, and I'll give you an example of we're at a value conference. So this project is a 58,000 ounce a year producer. This is the base case, 8-year life. This was a model done at $1,600 gold. So let's assume at $2,000 gold. We're looking at $60 million US in operating cash flow, $58 million US of which is free cash. So between Cerro de Oro and Copperstone coming on, at current valuations, we would have probably somewhere in the order of an 80% free cash yield on our stock. You combine that with the bigger companies in this sector, which at $2,600 gold, an analyst at Scotiabank last year said the gold industry has a free cash yield of around 10%. And we wonder why generalists don't want to invest in our sector. Being able to demonstrate a 70, 80% free cash yield is for me, the value proposition that exists for people in this room and those family offices and the like before the institutions. In many ways, the institutions are your exit strategy because they'll buy in at a much higher level when you've scaled up and the opportunity exists to play in this field, especially with a re-rate coming on in Mexico in the coming months. And yes, I think I'm out of time. I spent too long advertising Duolingo, but I'll leave you with that point. Small is actually beautiful, and Cerro de Oro, which we hope to have permitted by middle of this year, is one of those small, beautiful little mines that will generate a lot of cash to reinvest in the business and grow into something more institutionally interesting. So with that, thank you.